Okay guys, and welcome to part 2 of why the rich keep getting richer and why you should follow their example. Before we start, I think it's really important to understand what money really is and what the world's reserve currency, the US dollar, actually represents. The US dollar is a fiat currency, which means it's not pegged to the value of any tangible asset such as gold or silver. From the end of World War II up until 1971, the US financial system worked on the Bretton Woods Agreement, which required the countries to guarantee the convertibility of currencies into US dollars, with the US dollar convertible to gold bullion. However, it soon became apparent that the US did not have enough gold reserves to convert all the outstanding dollars. So in 1971, President Nixon depegged the US dollar from gold, and since then, its value has only been based on the public faith in the US government. Now, when it comes to the money system we currently have, we have to understand that it's been designed by the wealthy to serve the wealthy. Now, why is this, you may ask? Well, you see, when policymakers are making laws, their decisions are heavily influenced by lobbyists or paid persuaders of corporations. Their job is to encourage politicians to craft laws that are in the best interests of their corporate bosses. In return, the politicians receive funds indirectly by way of campaign contributions or donations to a charity of their choice. Companies can also influence lawmakers in other ways. For example, a company may offer to open a factory or facility in a state or region that is under the control of a politician, on the condition that certain benefits such as tax incentives or other sweeteners are offered. Now let's talk about banks. One of the myths we are told from a very young age that a bank is the best place to store your money. This is not entirely true, because even though you have a low risk of losing your deposit in a bank, you still have a guaranteed loss to inflation, which represents the inflation rate minus the interest paid on your deposits. Yes, you may still have the same bank balance at the end of the year, plus a minuscule amount of interest, but your purchasing power will have decreased by the rate of inflation. Let's look at how the purchasing power of the US dollar has been eroded over the years. If we go back to 1913, we can see the purchasing power of the US dollar was 26 times that of what it is today. Over the last century, the purchasing power has continually been eroded, while the working class wages have not been able to keep up. One of the biggest causes of inflation since the 1970s has been the dilution of the US dollar caused by massive money printing. The consequence of this printing has been that all the existing dollars have become more diluted and thus less valuable. Increasing the money supply has caused a tremendous amount of money to be poured into financial markets. Since the wealthy are the largest holders of stock, they have benefited the most as the prices have got more and more inflated. During the pandemic, while panicked retail investors were selling their investments at the lows, billionaires and high net worth individuals called whales were buying up these assets in droves. Central banks pumped over $9 trillion into economies worldwide. Once the stock market recovered, the wealthy saw their net worth increase massively. The US government also printed billions of dollars in stimulus checks that further diluted the value of the dollar. Here's an interesting fact. During the pandemic, the world's 10 richest men saw their net worth double, while 99% of the world's population saw their incomes fall. Elon Musk actually saw his wealth increase by 10 times during the pandemic. In the 1700s, economist Richard Cantillon proposed the Cantillon effect theory, which states those closest to the point of money creation, Wall Street, central bankers, etc., see their incomes rise, while those furthest away from the money creation see their purchasing power decline. This theory has been proven time and time again throughout the world. So how do banks actually make money? Well, you put your money in a bank. The bank loans out your money to other people at a high interest rate and pays you less than 1% in return. The bank then makes money on the spread, or the difference between what they charge borrowers versus what they pay depositors. The banks also make money through investment banking services, providing services to corporations and high net worth individuals and charging high fees. The key takeaway here is that the banks always get a better deal than you. Essentially, we provide them with virtually free money, and they use our money to make more money. Now, when it comes to investing, many people get attracted to the idea of day trading because the slick brokerage firm ads often give the illusion that easy money can be made. The fact is that 95% of retail day traders are not successful, and most wealthy people do not day trade. One of the reasons why most wealthy people do not day trade is because short-term trades are taxed at a higher rate than trades held more than 12 months, and high net worth individuals tend to take a long-term view to investing. Short-term trades can be charged capital gains of anywhere between 10 to 37%, while long-term trades are charged anywhere between 0 to 20. Now let's talk about working in the corporate world. Why do you think the government and the wealthy try to encourage everybody to be workers and climb the corporate ladder? The reason is because workers are the consumers of the economy, and the consumers are the ones that pay the lion's share of the taxes. You see, the wealthy need the consumers to buy the products from the companies that they own and to pay the taxes that they don't want to pay. So the whole system is designed to service the wealthy and keep the workers and the consumers under their control. Now, it's important to understand that in every publicly traded corporation, the company's board of directors has a fiduciary responsibility to always put their shareholders first above their employees. This is the reason why companies that are reporting record profits are sometimes reluctant to increase the wages of their employees, because any increase in wages reduces the company's profit, which hurts the shareholders. So the company has to balance paying their employees just enough to stick around, but not too much as it will hurt shareholder value. Since most CEOs receive the majority of their compensation in stock, it's not in their best interest to increase wages, as this directly affects the value of their own stock. Always remember that there is how things should be, and there is how things are. We all live in the present, so we have to deal with how things are right now. In my opinion, the wealth gap is not only going to increase, but the rate of expansion is going to accelerate exponentially. So what can you do? Well, you first have to recognize that this is the situation and not bury your head in the sand hoping for it to get better, as the chances are it will not. Education is the key. Ask yourself, how much money do I need to live the lifestyle I want? If you're not currently earning enough, then look for a career that can pay you what you need. If you don't have the skills, enroll in classes or teach yourself online. Not having enough money should not be an excuse to put off learning, as there's a mountain of free training in almost every subject online. Be prepared to work harder than others, and find a partner that supports your goals, not one that pulls you down or holds you back. If you're thinking of starting a family, then think carefully about how you're going to afford it. Have an honest conversation with your partner about exactly how this is going to work. Don't just wing it. Run the numbers. How are you going to deal with the potential loss of one income if one person stays at home? How are you going to pay for daycare and baby care costs? Do you have a support network that can help you with the childcare? Don't borrow money to get married. It's important to understand that to gain the maximum benefit from the financial system, you have to work for yourself. So always keep that goal in mind and be thinking of ideas to start a business of your own. Learn about money and investing, but most importantly, hit that subscribe button, click on the notification bell, and like this video. Take advantage of every tax saving offered by your company. Start a pension as soon as possible and enroll in a 401k in the USA or an ISA or SIP in the UK. Live below your means and try to save up to 50% of your income. Invest your money in an asset such as a whole market ETF so your investment is beating the rate of inflation. Surround yourself with positive, forward-looking people and eliminate negative people from your life. Well, that's it for me, and I hope this has been useful. Remember, I'm not a financial advisor, and this is not financial advice. Please do your own research before investing in any asset, and remember to hit that subscribe button, click on that notification bell, and like this video, as it really helps the YouTube algorithm. Take care, and see you in the next video. Adios.